Okay, so we thank you very much for coming to the Set Opportunity Day for the first quarter results of Indorama Ventures. I have on my left Mr. DK Agarwal, the CEO of PET and Feedstock, and he will give the introduction, and Mr. Vikash Jalan, who works for our strategy and IR department, will be doing some of the financial information. Thank you. So we'll start now, and thanks.
Thank you, Richard. Good morning, everybody. To start with, there's a disclaimer page because we have some future forecast numbers, our plan 2020. So I'll pause for a moment. This slide talks about our PET and feedstock dynamics, more short term. Like as you know that we are the largest PET company, and there's a seasonality factor in it because like summers are coming, and at the summer times the volumes are good, the demand is good. And historically, if you see in 2015 and 2016, second quarter have been the best quarter, which is you can see here in terms of core performance. So the below chart is on the core performance, the above chart is on the reported performance. The difference between reported and core is extraordinary one-off items that we normalize and show you the core performance. So you can see that second quarter in 15 and 16 have been good. First quarter 17 have been good as well. So I'll go into that in more details in the coming slides. What happened in the first quarter in the PET business is, as you know, that the crude prices have been going up, and the raw material prices follow the crude prices quite immediately with a very small lag. But the PET prices being more downstream, so midstream prices they kind of factor in the crude price increase very quickly. So raw material prices have gone up, but the PET prices there's a lag for about few weeks, and this is what happened in the first quarter. So PET prices, so PET margins in first quarter have been impacted negatively because of the lag impact. But as you know that in the second quarter the prices have started to go down, so which means that the lag impact is going to be positive for PET because the raw material prices goes down, and PET prices there's a lag for that, and the margins are expected to move up as we saw in April. So I'll take you through the first quarter results. Production in the first quarter is up 24% year on year to 2.2 million tons, and this is mainly on the back of the acquisitions that we have done in the second quarter last year. So that has been the prime driver for this, as well as you know that last year we had a planned turnaround at our MEG assets in the US, and then there was some technical issues, so the plant was down for about 4 months starting from January last year. So that volume has also come back in the first quarter this year. So that has also contributed to the increase in production in the first quarter. Core EBITDA 7.7 billion baht, up 60% year on year, quite strong performance, and core net profit at 3.3 billion baht, plus 173% year on year. Core EPS following the core earnings at 0.64 satang, again up to 21% year on year, and the reported EPS after PERP is 0.87 satang, 87 satangs, is plus 8% year on year. The difference what you see between the core EPS and reported EPS, or core EBITDA and reported EBITDA for that matter, is inventory gains. As I said in the beginning that first quarter have seen the rising prices, and as you know that we carry certain inventory at any point in time and we have to mark to market. So first quarter has seen inventory gains, and after normalizing that we get the core profit and core earnings. So that's why the reported EBITDA or reported net profit are higher compared to core net profit and core EBITDA. Going more long term, the last 12-month performance, production is up 28% to 9.2 million tons. Again, this 28% year-on-year growth is the first time we have seen the full year impact, the full year earnings of the two big acquisitions that we did last year, and that was more like a step change in the earning profile of the company. One was in BP Indicator, and the second is Cepsa in Spain. and they have both contributed meaningfully in the last 1 year, as well as improved the earning profile of the company. Core EBITDA, 30.2 billion baht, plus 37% year on year, and core net profit at 11.8 billion baht, up 84% year on year. This chart shows that how the returns have evolved over time on the long-term basis, which is last 5 years, and also on the short-term basis on the last 5 quarters. And you will notice that since 2013, there has been a evolution in the earning profile of the company, and the returns have started to improve year on year from a single digit in 2014, 2015. In 2016 and in last 12 months, we have seen double-digit returns. In EBITDA margins have gone up 10.7% to 11.2%. Return on capital employed up from 10.4% to 11.7%. And return on equity in last 12 months at 14.9%. Looking at more short term, in first quarter, the EBITDA margin was 10.7%, ROCE at 12%, return on equity at 16.3%. And this clearly tells the change in the earning profile and of the company. This slide tries to tell that how the performance have been on a same store basis, like if we exclude the last 2 big deals, BP Decatur and Cepsa Spain. So the first column tells you the performance for these 2 acquisitions that we have done, and they have contributed 16.2% ROCE, which is above our hurdle rate. And so these 2 M&As have performed better than actually what we expected. And then the last 12 months performance, excluding the BP and Cepsa Spain, also performed well compared to on the same portfolio basis. Like if you see the last year 16, we saw a return on capital employed of 8.6% compared to last 12 months in first quarter, it improved to 10.7%. So not only the new deals, what we have done better, but also the same portfolio, what we had last year, they have performed better in the last 12 months. On the cash flow, you can see that in the last 12 months, we have created an operating cash flow of 29.1 billion baht. Some of that have been used for the capex programs. We have few capex programs ongoing, so we'll talk a little bit about it later slides. And then there's a positive cash flow left after the spendings, the strategic spendings in the last 12 months. Whereas as we compare to last year cash flow, we created 21.4 billion baht as operating cash flow. Most of it and more than that actually was spent in the capex programs, and that was mainly on the 2 big deals that we have done. Actually one of them got closed end of March, so that capex is also coming, and there was some borrowing for that. So cash flow has improved year on year. Our net debt to equity in first quarter is at 1 times. Our net operating debt to equity at 0.8 times. The difference between net debt to equity and net operating debt to equity is we have certain capex programs ongoing, and there is a certain capex spending as on date. So, and they have not started contributing the earnings because they are in the construction stage. So as they complete, they will move into the proper net debt. So if we normalize that, so that's net operating debt to equity at 0.8 times. That's the EBITDA bridge, that how the last 1 year performance segment wise, that which segment have contributed to this growth, 37% growth in EBITDA year on year. And clearly you can see that the Western feedstock has been the outperformer, and that's primarily because of the 2 deals that we have done. So BP Decatur and Cepsa Spain, they both are into the Western feedstocks, so they have contributed. And even PET have seen some marginal growth in EBITDA, and Asian PTA as well. So basically the major driver year on year was the Western feedstocks, which includes our EOEG facility, the MEG. MEG margins have been better in the last 4 to 5 months in the first quarter, starting from November. Now in the second quarter, they have started to a little bit normalize. PET EBITDA per ton at $73 compared to $73 last year compared to $74. So there's a $1 increase, more or less flat. And Western feedstock has seen, let's say, $117 per ton to $118 per ton. So mainly the improvement has been driven by the volumes. First quarter 17 versus first quarter 16 year on year. Again, the outperformer is the Western feedstock, and this is driven by higher MEG margins and the normalizing the MEG volumes, because last year first quarter we had MEG turnaround, plant turnaround, and some technical issues which got resolved. So that has been the driver, and then other products like NDC, IPA, even paraxylene in the US. So all this form the part of the Western feedstocks, and all of them have contributed to this growth in the earnings. Reconciliation of core to reported net profit. As I mentioned in the beginning, that our reported net profit includes the inventory gains and any extraordinary incomes or expenses. So in this quarter, the major item was inventory gain. So we saw 1.3 billion baht of inventory gains. After tax adjusted on that inventory gain, we saw a net profit. The core net profit was 3.3 billion baht, and 4.4 billion was the net profit before extraordinary item, which was not much. And we saw the reported net profit of 4.4 billion baht in this quarter. Little bit on the balance sheet. As you know that we operate in many countries. Today we are in 71 countries with the completion of Glanzstoff acquisition that we announced last month. So it's expected to complete in the second quarter. So I'm including that. So we are in 71 countries and we deal in many currencies. And we often get a question that how do we manage our foreign exchange? And we operate in a natural hedge environment. Like we have a lot of US dollar assets, and against that we take the US dollar borrowing and also the equity. So we are naturally hedged most of the time. So US dollar assets are matched against US dollar liabilities, and euro assets are matched against euro liabilities, and the other currencies as well. So we don't have much fluctuations on the foreign exchange. Our long-term loan and debentures are evenly distributed in terms of repayments, which you can see that they are more or less evenly distributed. And our cost of finance at 4.1% on a blended basis, and the company is rated A+ by TRIS with a stable outlook. And recently we got the rating in October 16. Our current ratio remains at 1.3 times. And the liquidity is important at $1.5 billion. Liquidity means like the cash and cash under management that we have, and also the unutilized banking lines that can be used if required. So liquidity is important because there could be some fluctuations on working capital requirements, because working capital is something which follows the crude prices, and having a liquidity is good, because then if there's a requirement, then it can be met with the liquidity that we have. So with this, I give to Mr. Agarwal to take you through the business and the plan for 2020.
Good morning. So IVL, where it is moving in 2020, these are all committed projects. If you see, today our EBITDA of 2016 was $775 million. How this bridge is showing that how the company will keep performing. The major projects which are coming up is, one is Rotterdam expansion. We have, this is under mechanical completion now, and it's going to start very soon in July. This will add nearly new capacity of about 350,000 tons. Basically, this is replacing the imported PTA which we are bringing in from Asia. So it's just a EBITDA of kicking in the EBITDA of about 30 to 35 million euros. The second is the very important project, which is the gas cracker. We are the first Thai company to have shell gas cracker. This is likely to start by end of this year. Fourth quarter will be the early startup, and that will add up to the 2018 EBITDA, and then you have the full impact in 2019 coming in. We have IP expansion, so all we will show you. Cost, of course, we continue to work on the operation excellence, so that will be some contribution from the cost, and as you operate at higher capacity, you get lower cost because the incremental production is at lower cost. Volume will come from, because your operating is say 85%, the additional market demand is coming up, so all the assets will run at higher capacity. Mix is the sales mix as well as the market mix, because we are operating in many local countries like Thailand, Indonesia, China, India. All these countries, the local gets better premium. Similarly in the European local market. So mix, product mix and the market mix, and announced projects which I talked. And we have taken small improvement in the margin because PTA has been, Asia PTA has been suffering for last so many years. So, you know, nearly since 2012 there has not been improvement in the margins. And now I will show you that how the capacity utilization will improve. So this will bring the EBITDA to 2020. This is all committed projects. So there is nothing which is not committed here, or it excludes any future acquisition. The announced capex will be about, which we have committed is 1.2 billion, which will be funded from internal generation and debt. 0.88, which as you saw that net debt equity has already dropped to 0.8 and it will become nearly 0.4. So basically from a very strong cash flow, and that excludes, that includes the bonds as a debt. Means we still continue the perpetual as a debt and no warrants. So the company will be in a very, very comfortable position. And if the warrants gets exercised, naturally the debt will come down significantly. So what are the projects coming up? This shows you bridge 16 to 20. You saw the bridge. Now year by year how the EBITDA is likely to move up as the new projects kick in. You saw the acquisition of one of the cracker, tire cord plant, Glenstoff. This is expected to be completed by end of June. This adds up a new product portfolio, which is viscose tire cord. We already have polyester, we have nylon tire cord, and so that will add to the bottom line as soon as the acquisition is completed, and we will be able to serve our customers much better with a larger product portfolio. As Vikas explained, we had a fantastic 2 acquisitions which we did, Decatur assets and Spanish assets, which significantly contributed to the bottom line. We just completed 12 months of that. So 16 had only 9 months, 17 will have full year, and you saw the first quarter result. So we have delivered 3 quarters of fantastic results. 16 had a shutdown of EOEG because of technical problem. This was an extended shutdown. So 17 will have a full benefit, although there is a small shutdown in 17, but there will be a lot of normalization of EOEG as you saw first quarter 17 versus first quarter 16. I talked about the PTA Rotterdam expansion, which will give full benefit in 18 and the for few months in 17 starting from July. We also acquired the 25% minority shares in Trivera, so it will add to the EPS, doesn't add to the EBITDA. And the other interesting part is the gas, as the shale gas in America remains very cheap still, in spite of low crude oil prices. And if you see on the right hand side, it shows you if we had cracker today, how much EBITDA it would have made. So in first half of 16, it would have made $52 million when the crude was still very low. And you see the first half of 17, $72 million. So if you analyze, it becomes 140 million EBITDA. So anything from 120 to 140 will be the contribution of this gas cracker. This is a multi-feed cracker. We also announced expansion of our Chinese tire cord, polyester tire cord. This will start in 2018. IPA has been a great contributor in our profitability in the Western feedstock, as you saw. We are the only producer in Europe. We are going to expand this as we have tied up more metaxylene, and this will be available from 18 and 19, and we will emerge as one of the largest players of IPA in the world. We continue to debottleneck many assets. Bangkok polyester rayon will get debottlenecked. We are also debottlenecking Chinese PET plant in the fourth quarter. So all these expenses are committed. And then in Indonesia in 19, we are converting PET into fiber, so much more value-added product line. So all these committed projects will cost $1.2 billion of total capex. This is some photographs. This new PET expansion, as you can see, is mechanically complete. Right now it is in the tie-end stage, and then it starts commissioning. We expect this to start in July. Actually, this plant will become the most cost competitive integrated plant in Europe. This is a technology of GPT and very efficient PTA cost structure, much lower than even any of the conventional PTA plants. And our total IVL PTA capacity will increase to 1 million tons. So this is going to be 660, 670. Actually, it can run up to 700. And then we have in Spain, so will be 1 million. So this will just replace the imported PTA and make us fully integrated and a very cost efficient position. As you know, the European profitability was done fantastic in PET because it works on import parity from Asia, and the sea freights were lower in 16. In 17, sea freights have started moving up, so import parity is changing. So this is a very exciting project which is getting completed. I talked about this cracker, 440,000 tons. The beauty of this cracker is that our capital investment is going to be $1,000 per ton versus a newly built cracker of $2,500 per ton like Exxon's, CPChem's, Sasol. So this has a big capital advantage, and this will help us to capture the entire value chain in America. You have seen that United States, North America continues to perform in a very fantastic manner in terms of EBITDA contribution, and this will complete the chain from ethane to PET, and we already have Mixalin to PET with Decatur acquisition. So it's the most integrated PET plant in the North America, and you can see the construction stage of this plant. We expect this to start by fourth quarter. So 2018, it will have the contribution of what you saw, $130 to $140 million EBITDA. This just give you some slide of what is the headroom available. In 2020, you saw the what was the EBITDA, and if the warrants gets exercised, where you've seen the promoters have already committed, they will like to go for those warrants as first warrants, and our headroom of net debt to equity. The red, this shows the two parts, right? One is that if we can borrow up to 1-to-1 and warrants brings in new cash, there is a headroom of $4 billion of incremental headroom for capex. Now, I don't say that we're going to spend this money. This is just to show you that it's a growth-oriented company. Many opportunities of acquisitions are there because we are still in a benign environment, and many assets are available around the world for acquisitions, but we only buy which is a strategic fit for us. So it will continue, that IVL will continue in a growth mode with the right assets, which are good and a strategic fit. It's very important that you buy right assets which has a good fit with you. The second graph shows about the PTA business. You saw in 2012 to 16, huge PTA capacity was added because 11 was so profitable that the payback used to be 3 years. So 21.4 million tons, primarily mostly in China, came in. 12 million ton was the demand, so left a surplus of 9.4, and the industry utilization rate dropped to 78%. So the margins were nearly below cash break even. I mean, they were just running for the sake of running, and that's what we suffered. And this has impact not only on the PTA, it has impact on the entire value chain, because in Asia, when the PTA is cheap, end product like PET and fiber is cheap, which can go to Europe and America and compete with our local production. So it compresses the margins there also. So it has a chain effect. And in the 17 to 21, as the investment will certainly slow down because it doesn't make sense to run at zero cash. A 6 million ton capacity coming in, 15 million ton will be the demand. As the demand continues to grow, deficit of 9 million tons. This means the utilization rate improves to 84%. And when the utilization rate improves, naturally there is a better margins. So this is what we hope that PTA Asia should, and which should impact the entire value chain. We are very financially disciplined, as you can see, in spite of all these acquisitions which we made. You saw the cash flow. The strong cash flow pays off the acquisition money which we spent, and the first quarter 17, the net debt to equity is only 0.8. The share of IVL has continuously performed. We did 2 IPOs. As you know, the first IPO was Indorama Polymers, which was delisted and then we converted into IVL. Our compound return has been 26% since launch of IRP IPO versus 8% S&P. So we have given a very good return to the shareholders. And even those who participated in IVL IPO, we have given 22% return versus 11% for those corresponding periods. So this 8 and 11 are different because they were different time launches. So that shows you about the shareholders' return. The world is not static, world is changing. As you can see, you never had cell phones, and the Africa continent is developing, many parts around the world. China, India is becoming a strong middle income earners. 7 to 9 billion will leave, the population goes up to 2050 and 75% live in cities. This means a lot of spending in, being health conscious, furnishing, all this helps up into the polyester chain and it creates a demand. So this is not a sunset industry, it's a sunshine industry. You don't reduce the consumption and the polyester continue to innovate. Lifestyle keeps changing, more smartphones. You change smartphone more than anything else, right? An iPhone keeps coming, 7 series and many series, and many of our products go into those iPhones and those large scale TVs like NDC. We are the only producer in the world. NDC goes into those screen of the iPhone and also the large LED television sets. Saw auto entry, we have the airbag yarns, we are making many auto components, tire cords. Innovation continues in the auto to make it lighter. Self-driven cars doesn't change the composition, it only reduces that person will not be there, but it becomes more and more application and processes driven. There's a lot of focus around the world of sustainability. We are the largest recycler in the world today. We have in Nakhon Pathom itself a recycling plant. And beauty of PET is that it gets recycled. You can put back into the fiber or into the bottle. And IVL is very much focused on the sustainability drive here. We are the first Thai company to take the US shale gas advantage with the startup of this cracker, which is a chief feedstock, which is a revolution in the petrochemical industry in Americas. And with our IVOG acquisition, and then we went for this cracker, is a great platform which we have created in North America by integrating the assets. And of course, there will be continued to be digitalization. So IVL is focused on all the emerging trends with our HVA platform and sustainability drives. This gives you a little bit of how the recycling has changed. Today we have recycling in 6 countries. When we acquired Wellman, we are the largest recycler in Europe. We have a plant in Netherlands, we have in France. We make fibers in Ireland, which fetches premium because it's recycled fiber. In Americas, we have in Decatur, Alabama and Spartanburg. In Mexico, we have a wash line integrated. And in Thailand, as I said, Nakhon Pathom, we are also looking at Indonesia. So this doesn't compete with our business. It's a substitution of raw material by recycled flakes. So we continue to focus on this recycling innovation, on chemical recycling. We are also working on many other things. And you can see that our growth is 23%. North America has delivered very good results. If you see regionally, North America, you have Europe and Asia. North America has outstripped everything because disciplined market integration slate which we have created, and you can see that today nearly 5.2 million tons of capacity in North America after this cracker. All the pieces are there, and then you have our competitors, which is Pier A, which is you can guess, and Pier B. So we are much more integrated, and that gives us a competitive advantage versus our other players in the marketplace. Like we have paraxylene, we have MEG, we have ethylene, and end product is PET and fiber. And actually we are looking at fiber expansion some more in North America. So this gives you a historical that how the EBITDA 461 went to 775, and we can't give you the numbers, but you can imagine that 2020 HVA contributes 50% of the EBITDA, will continue to remain a significant percent. The big is Western necessities, where you can see a big jump coming up there because of the cracker coming up and because of the full utilization of all these assets and full year impact. And then there is some marginal improvement in the Eastern necessities because of various debottleneckings and slight improvement in the margin. So growth, we continue to have multifold strategy that we focus on every product line. We are in every segment, and so it's a diversified portfolio. If you see the third graph, which is very interesting, many companies are exposed to one value chain. Some are just refiners, some are just petrochemicals in ethylene chain, some are just in automobile, or some are in banking. We have, well, I have 22 revenue streams. Means you have a geographical hedge, you have product hedge, so you have an Americas PET, you have Americas paraxylene. All these operate differently. Countries operate differently, the economic growths are different, which and HVA also different product portfolio. So this reduces the volatility of the earning and doesn't bring you like, when suddenly ethylene margin drop, you have a lower earning coming up. And so we are not in cycle, it's a more stable earning. And that is now, and in spite of benign environment, and as you saw in 2008-16, we also went to double digit 10.7%, because as you integrate more value chain is captured, the revenue doesn't go up accordingly, and we continue to improve the EBITDA percentage, which translates into core EPS growth. As you can see in 17 is 1.79. I'm not putting here the reported EPS because reported EPS has negative goodwill and all other extraordinary items. And we continue to pay dividend, but we are not paying the full earning as a dividend because we want to conserve cash for our growth, but we continue to improve the dividend at 66 thank. So IVL has a bright future so long we are in a right shape and we continue to do correctly what we have been doing so far. Every company runs on a certain competitive landscape. IVL has evolved as the largest player of PET in the world today because we were very focused regionally. We have a great integration of the management. We have a good innovation platform around the world in fibers. We work with partners like Procter & Gamble, Kimberly-Clark, Coke, Pepsi around the world, tire companies like Michelin, or all the other. So this is a mix of innovation and commodities, or what you call necessities. We continue to develop new material, like we made PLA fiber, which goes into shale gas fracking. So there are many diversifications, and sustainability is very important. I think my colleague Richard will cover on this sustainability side, and we continue to sweat the assets. The whole profitability comes from sweating of the assets. It makes a lot of difference when you run a plant at 80% and when you run at 95%, because that additional 15% makes a lot of money. And like what you saw in Western Feedstock, why the profitability came in, because we ran the plants at much higher capacity. Actually, Decatur assets had the highest ever production in the history of BP, and we are very proud of our leadership or the people who came to us with these acquisitions. So this slide, I'll hand it over to Richard to cover up. Yeah, thank you.
So just a couple of slides. One of the things that I think some investors did ask us about during our AGM recently, which shows that people are following the company closely, is the fact that we have this sustainability drive. The word sustainability covers practically everything to do with business. It means becoming more efficient. It means not breaking rules and regulations, and there are various other things. But one of the things that I think we could say we are very proud of is the fact that we're actually ranked about third in the emerging markets now by the DGSI for our sustainability. And this really means that we do all the things that world-class companies do. One of the interesting points that I found was that in Thailand, we were rated the #1 for transparency, which it implies that we're actually providing you all with sufficient information to make investing decisions. But we do all these things, which are basically, you could say they're pieces of paper, but for us, the reason that we do them is to try to make the company more cost efficient, to ensure cost efficient includes things like not breaking rules and regulations, because that's where you lose money to the courts. So we're trying all the time, consistently, to ensure that we are a good citizen of every country where we are. And the fact that these names up here are internationally renowned agencies which measure your sustainability means that for Indorama Ventures, we're actually ranked as very good by many international brands around the world, like Bloomberg and CDP, MSCI, for example. These all rank us very, very highly, and this is within only a couple of years. So what that means for investors is you should see us not overspending on our costs. We will be trying to make the factories much more efficient, and to be able to do that, we are collecting data consistently, lowering the amount of energy. I don't know whether everybody knows this, but energy is a big factor in the cost structure of a PET or polyester company. So the more we lower the use of energy, the actual profit starts to go up even further. The last one is basically to mention that we have this vision, this new vision, which says that we want to be a world-class chemical company making great products for society. And for investors that followed us over a long term, will think of us as a PET or a polyester company, but actually that's changing. We're investing into sideways, you could say, into high-value products which are not purely polyester. We've got nylon, we've got bicomponent fibers, for example. And what that means is we're changing who we are into a chemical company, and that should make us a lot more profitable in the future. And what you will see is a lot more responsibility for our actions going forward, so that we are a good public citizen. Now, that's the last slide. So if you have any questions, please do raise your hand and ask freely. Thank you very much.
Yes, this quarter we have seen big inventory gain, 1.3 billion baht. Yeah, but then even the core profit was 3.3 billion baht if we exclude the inventory gain, which is against 1.2 billion baht in the first quarter last year.
So normally, we try to separate that how the core profit has changed. So if you see the core. Not really, as 30%. 3.3 billion is core net profit, and 1.3 is the inventory gain. So it's about 30, about 35. Now this always happens in. Yeah, that's a good question. Let me explain. Operational profit is 3.3, right? Versus last year 1.2. Okay, same quarter. So we have an improvement of 200%. So big improvement. Last year we have inventory loss 447 because market drop. But this year we have a profit 1.3. So why we separate this two? We cannot control this inventory, because if crude goes up, you have gain in the stock. If crude go down, you have little loss. But you have to, for running the business, you need to have inventory. So it's a translation thing,
So, how about the target growth for this year? How about the sale of this year of the target you established?
So our target growth for this year in terms of production will be about 10%, 8 to 10%, and
10%.
so R2. That's what the plan is.
Another question. You mentioned about the advantage of US shale gas advantage, right? What do you mean by that?
So good question. In America, the gas and the oil is called fracking, horizontal fracking. This is a new discovery in America. The crude oil cost is only $45 a barrel, crude oil. And then the gas comes out of it. And the gas is cheap, the gas. And from the gas, $3 a million BTU. In Thailand is $8, $9 a million, 1/3 of Thailand gas cost. So when the gas is cheap, you make ethylene cheap. So in America, ethylene is only $550. In Thailand, is $1,200 per ton. So you make cheap ethylene, and then you make product out of it, ethylene glycol. So many crackers are getting built in America now. Even Middle East doesn't have cheap gas now, because Middle East gas also finished.
Because of the ethylene is cheap, right? You mentioned about that. That's much more cheap and lower cost
In America.
in America.
And we don't make ethylene only, we make glycol. And that glycol is made from ethylene. So now our plant at present is to make from ethylene to glycol. But I don't have my ethylene. So now with investment I will have ethylene also. So we are integrated now from gas to glycol.
The production in America is half of the total production, right?
Nearly 40%. 40%. But that is many components. So PET is 1.5 million ton. PTA is 1.6 million.
Ethylene is the main of
No, only small quantity. Ethylene will be 440,000 tons. Not very small. So basically, PTA is PET is 1.5. PTA is 1.5. PET is 1.5, and then you have paraxylene 900,000. MEG is 550,000, and ethylene will be 450. Ethylene and propylene.
okay. Because of oil now it's in downtrend about 50 WTI 50 around that, right?
Brent, yeah.
Suppose that if oil go up to 60, what will happen?
Okay. So if it goes to 60, we also work. So we talk about IVL, right? Or you want to know about America. So IVL doesn't make any difference, because if it becomes 50 to 60, then we pass on the cost to the customer, right? We all say $100, but we will have inventory gain. Then you will ask me again, why inventory gain, right? So you will have inventory gain. And in America, cracker will make more money, because
You said that oil is the raw material. We gain because of the raw material is down, right?
right. But if the raw material go up, our price also go up. So our price doesn't get compressed, margin doesn't go down, because we work on margin, and margin are already compressed. So if it 50, we even had $120 a barrel in 2009. Then PET price was much higher that time. So we pass on everything.
You said that now the sale is 45% of sale come from USA, right?
No, no. Shell oil is a very small percentage of the world.
I mean total sale,
Yes.
right?
Huh.
Suppose now the tax in America.
Hmm.
Okay.
Yeah, very intelligent. So if Trump makes 15%,
No, we pay 38%. We pay 38%.
no, sorry. So you're right. Today tax rate is 38%. 38. If Trump makes it 15%, oh, big gain. So 5% has impact of how much?
Actually, 50% we pay in the US.
So it's about, because we have a deferred tax liability. We provide the liability in our books based on 38%. So even that liability will get reduced by 100, and our earning will go up. So
How much?
can you give the number? I think
Yeah.
140.
Yeah, actually, today 50% of my tax, global tax,
Global tax.
we
50%.
50.
Global tax.
Yeah, we pay in the USA.
But in US, you have share for almost 50, right?
Yeah,
So
so
from USA.
yeah, so revenue from North America is about 45%, but we pay more tax in the US because tax rate is high in the US.
You said that 38.
Yes. So today, 50% of our tax is paid in the US, the global tax. So our total tax percentage is about 20% global.
On average.
On an average, we pay 20% tax. We pay more in the US, we pay less outside US.
Okay, so let me calculate for you. You are very good. So first quarter tax is 850 million baht. Okay, 850 million baht, 850 million baht, million baht, right? So if same profit 4 quarters is 3.4 billion tax, right? Total tax. 50% in America is 1.7 billion baht. So if reduced by half, you get 850 million baht in extra profit. This is only for current year. But last 4 years, liability is also provided on 38%, deferred tax liability. In accounting, you have to provide deferred tax liability. That will also get reversed. So you have one-time gain also. So we are very excited about Trump reducing the tax rate.
How much profit you expect?
So we just...
Overall,
Uh,
Trump effective.
so if so just say they become 20%, right?
20%.
So it becomes 3.4, so 1.7 million, maybe if you reduce 30%, a billion baht, not a billion baht, 3.4 to 1.7, and if they reduce by, so about say 600 million baht. If you reduce even 20%, from 38 to 20, 25%,
How much increase in profit?
600 million baht for that. Yeah. It all depends on, Vikas can give you a table, okay? Vikas, can you send him a table? Very good question, but these are the points, actually we forgot to mention you. You asked us. We should have told you.
The price of now today of idea increased because of this issue.
Yeah. Thank you. Any more questions?
There's a new trend when loan and debt equity ratio coming, net profit margin coming up, and your trend is similar to that, having the correlation and the EBITDA. I have one new suggestion regarding the new capex you are mentioning. You are having business segment 6, 1, 2, 3, 4, 6. 3 you are comparing with the competitor and another 3 on the top, not comparing with the competitor. Do you compare with the competitor upper 3 Israel, NBC?
No, that slide is shows that my competitor doesn't have those plants. We have all the 6 plants. This means we have paraxylene, we have ethylene, we have MEG. He doesn't have that. He only have PTA, PET, and fiber. That's all. So we are more integrated. This is just to show you an integration.
Another suggestion on slide 10 and 11, organic 37% and inorganic growth is 60%. Means you are excelling more on inorganic growth.
Yeah.
From your capex, how many percentage organic the same as
Organic and inorganic. Good.
capex mix?
Yeah.
Any other questions?
Okay. Thank you.
Thank you very
Kapun
much.
Kap.
Khop
Thank you.